Hello there, and thank God it's Friday. Thank you for joining us for Business Nigeria live here from our studios in Abuja. These are the top stories we are tracking for you at this time. Nigeria's economy on recovery path as PMI hits 52.3 points. NNPCL says digitalization, AI, and other redefining entire energy value chain. Stocks dollar slips bond pummel again as the trade war impacts markets. Today on the show, we have three insightful segments. First, we'll start with the latest report by the Central Bank of Nigeria, which says the country recorded a balance of payment surplus of $6.83 billion in 2024. The second segment of our discussion will look at the naira for dollar for crude policy and also focus on some monetary and fiscal issues ahead of March inflation figures. Later on the show, we will now take a step towards looking at how we could better strengthen economic ties between Nigeria and Belgium. Promises to be very interesting. Let's start with stories making headlines. Now, the Nigeria's economy outlook appears to be on the path of gradual recovery as the Central Bank of Nigeria reported a steady improvement in the country's purchasing managers index, which rose to 52.3 index points in March 2025, up from 51.4 index points recorded in February. The rise signals the third consecutive month of economic expansion and reflects a growth-based confidence and resilience across key sectors of Nigeria's economy. According to the Apex Bank's report, the sustained growth in economic activities is broad-based with key sectors, industries, and services and agriculture all recording positive momentum. The composite PMI for the month of March 2025 stood at 52.3 index points, an indication that the nation's economic activities expanded for the third consecutive month. According to the Apex Bank report, with all the three major sectors, there was performance. The service sector reported 51.5 points, and its contributions to overall composite scores implied it maintained a part of growth, the report stated. The agricultural sector led the index with a robust PMI of 5.7, representing the strongest growth among three sectors. The Nigerian National Petroleum Company Limited says digitalization, automation, artificial intelligence, and advanced analytics are redefining the entire energy value chain. Group Chief Executive Officer of the NNPCL, Mr. Bayo Julari, said this in Abuja at the Society of Petroleum Engineers Nigerian Council 2025 Oloibiri Lecture Series and Energy Forum. The NNPC chief, represented by the Executive Vice President Upstream, Mr. Udi Inta, in the keynote address on the industry's operations, said globally upstream oil and gas companies were expected to do more than $30 billion in digital technologies in 2025. He said the NNPCL have embraced digital transformation not as a buzzword but as an operational imperative. In his address, Chief Executive Officer of the Upstream and Petroleum Regulatory Commission, Mr. Gbenga Komalafe, emphasized the need on driving energy sustainability through regulatory enablement of upstream operations in Nigeria. Now, let's get to our first discussion this afternoon. Nigeria recorded a balance of payment surplus of $6.83 billion in 2024, marking a sharp reversal from consecutive deficits posted in the prior 2 years. The latest figure released by the Central Bank of Nigeria signed a broad-based resurgence in the country's external finances, aided by wide-ranging macroeconomic reforms, stronger trade flows, and a renewed sense of investors' confidence. The BOP, which measures the country's financial transactions with the rest of the world, swung from a deficit of $1.21 billion in 2023 to $6.83 billion surplus in 2024, underpinned by sharp improvements in the current and capital accounts positions. We're live in our Abuja studios. Is the Director of Statistics Department at the Central Bank of Nigeria, Dr. Usman Moses Opanachi. Thank you so much. It's good to have you live in the studio.
Thank you so much, Tolu. Good afternoon, viewers.
Great. Like I said in my introduction, when I look back at the figures we've had in the last 2 years, this performance, obviously $6.83 billion, is impressive. Can you tell us some more facts about this or an overview of these figures?
Oh, great. Thank you so very much. And I think I like to place this in a context.
Okay.
So that viewers can appreciate what has actually happened. The last 2 years has witnessed transformative reforms, implemented by government. And on the monetary side, the CBN has been, in the forefront of implementing monetary and financial reforms. Now, what we are seeing in the form of a transformation, or what we are seeing in the form of very impressive results on our balance of payment, is in part a crystallization of the effect, the impact of those reforms. Now, a balance of payment is a statistical statement that summarizes the economic and financial transactions of a country relative to the rest of the world. Now, this statement can be measured or can be produced on a quarterly basis, as we do in Nigeria, and sometimes, and then also on an annual basis. It records, financial transactions that underpin the movement of goods and services between residents of a country and non-residents. And like you have rightly said, at the end of 2024, Nigeria posted a surplus of 6.8 billion, and that's phenomenal by any standard. In fact, if you look at our dollars, if you look at what our comparator countries are reporting, I'm sure you will be celebrating as I am.
Interesting stuff. But let me follow up again that some investors, some analysts have all come up and said, CBN, we need more facts to these figures.
Oh, sure. And we're available to provide the facts. In balance of payments, you're looking at, activities, some of which are tangible, others are intangible. Sometimes we call them visible and invisible. I'll try to avoid some of those statistical techniques. Now, so if you take the current accounts, for example, that is where we record transactions in goods, right? And then transactions in services, as well as secondary income and primary income.
Before I let you go, for a man on the street and businesses and, of course, investors, they will be like, okay, I think investors clearly know where they stand in this. But for the man on the street and some other businesses, would they look like, what does it really mean to me?
Yeah, I think that's a very helpful question. Let's start with what this has done in terms of our reserve accumulation. More external reserve means that your war chest, in terms of your capacity as a central bank to defend your currency, is improved, it's enhanced.
That's true.
So I can assure you that with this level of reserve, even speculators will have to think twice, because you could easily get your fingers burnt. So, and that's why you are seeing, some stability in relative terms in the exchange rate of the Naira. Bearing all the international, issues around Trumpism and all of those, we can see quite clearly that right now there's really no premium between the official, or the Nigerian foreign exchange market rate and the BDCs. We've not seen this in a long time.
That disparity.
And so for the regular Nigerians like me,
and me too.
Okay, for the regular Nigerians like us, good. We expect to see a dampening effect of this on prices. Because typically in Nigeria, the pass-through from exchange rate alone to inflation is in the neighborhood of over 30%. And so if you're able to stabilize the exchange rate, that means that you're going to be able to have a handle on inflation. And we're already seeing that. Prices are moderating. And the outlook that we have, or that we see, is that this pattern or this trend is likely to continue for the rest of the year. So that is one very important takeaway for the regular Nigerian. The other one is this. When we have a surplus means savings. That means we, as an economy, can invest these savings into, sectors, or wherever we invest them. We will be able to increase investment, and by increasing investment, what are we doing? We're creating jobs, right? We're creating jobs, and by creating jobs, we're alleviating poverty, and we're improving lives. So the standard of living of Nigerians should be looking up, not down. on account of this. And that is why, you know, some of us cannot wait to have this kind of result replicated in 2025 and
of course,
after,
of course.
you know. So, but let me conclude also that the creditworthiness of Nigeria as a country improves significantly with a balance of payment surplus. And that's why you're seeing the flows. And more will come. And as these flows come, whether they are, if they are foreign direct investment, you know very clearly that they increase the productive capacity of the economy. Now, even if they are portfolio investments, some portfolio investment come in and seeing that, you know, as the confidence in the economy improves, they tend to stay. So either way, that also should lead to some sort of macroeconomic advantage for the country, which should trickle to, you know, welfare for the regular Nigerian.
Brilliant way. I think it's a good way to leave it there. Dr. Usman Moses Okwanachi is the Director, Statistics Department at the Central Bank of Nigeria, breaking down all of these figures for us and making us understand what it means for us. Thank you so much for being on Business Nigeria today. We appreciate this and have a great weekend.
Thank you so very much for having me.
All right then. Well, coming up next on the show, we will look at some monetary and fiscal policy issues and also this Naira for crude development that we've seen drop again in the price of PMS and ahead of March inflation figures. Professor Ken Ife, development economist, joins me live after this break. We continue the conversation. Don't go away. All right, now let's move to another topic. Now, all marketers have stated that Nigeria will soon heave a sigh of relief as the pump price of petroleum motor spirit, popularly called Petrol, will drastically reduce due to the continuation of crude and refined product sales in Naira initiated by the federal government. They also stated that a major player in the sector, Dangote Refinery, has lowered its landing cost already as at the end of this week, further contributing to the reduction in fuel prices. An expert in the oil and gas industry reassured the public of the forthcoming price drop, while commenting on the federal government's directive regarding the Naira for crude agreement announced on Wednesday. Now, the official, however, couldn't project the expected amount as the price at which the government will sell its products remains unclear. Now, Professor Ken Ife is a development economist. He also wears another cap, President, Institute of Professional Economics, Economist and Policy Management, Nigeria. Thank you so much. Professor Ken Ife is also live in the studio. It's good to see you here in the studio,
Thank you for having me.
Thank you, Prof. Prof, I think we should start with this Naira for crude thing. You know, I was looking at some monetary and fiscal issues, but you know, we stayed on this the last time we discussed. Yeah. Finally, the agreement, I think, is we put pen to paper again. But to you, the back and forth and what the positives it holds for us, how does it come to you?
Oh, it's good news, actually, because I was getting rattled by that inconsistency. We have the opportunity of a lifetime to have big boys enter this ring, this boxing ring. And it's not just Dangote, but also modular refineries. And then I have 2 refineries that are purported to have been working from NNPC. So you need to give them a few days to manage our destiny and not toy with their fate. So I was happy that there was a pushback from Dangote. And then I'm also happy that he also showed instant goodwill. Instant goodwill. But obviously, by the time we take stock of the decline in prices of crude, and it's going to be further decline. It's going to go down. Without a doubt.
Yes.
I know that they will also come back to pass those benefits to Nigerians. So I'm very, very confident about that. And I'm not listening to what the oil marketers are saying. Up the price. Oh, come on.
What about the availability?
You can't be importing these products when there is surplus in the country. It just doesn't make sense. And in any case, anyway, whatever the arguments are, Nigeria is moving into a very, very dangerous policy angle because 2020 COVID period is nothing compared to what we are going to see now. It's not compared to what we're going to see. The fallout will be phenomenal because it will affect trade policy, monetary policy, fiscal policy, industrial policy, and investment policy. all the policies are going to be shattered. I am telling you that. I'm not prophet of doom, and I'm telling you the reality of what is going to happen. And it's only just beginning.
Prof, you know that clearly this would help reduce strain on the dollars too. That's this naira for crude thing. On the dollars, yes, because we started seeing a sharp increase even just between those 2-3 days. But moving on, I was asking you about the availability. Some say there are commitments abroad for international oil producers. There are deals that Nigeria have signed to paper. So if we don't ramp up production, are you sure that this naira for crude thing will not be at any risk?
No, there's always risk in everything we do. But remember that there's a law. The PIA law says you must satisfy local production capacity.
Yes.
It is stated there in the law. And this law didn't come today. It was signed into law in 2021. And it has always been around for the last 20 years being debated everywhere. So everybody knows. And then if you think that your commitment is going to be, after all, Nigeria securitized, the new administration securitized part of our crude revenue. So to Afrexim. So that is also in the mix. So, but the fact of the matter is this. We have to, in a world that is in trouble right now, we have to fall back on our own productive capacity in this country and rally around our capacity for our own survival. That's the point. And if you have the likes of Dangote, he's taking $20 billion and it's a productive capacity originating here and locating itself on our on adding value to our local materials, that has to be top priority. And I tell you why, because all the shenanigans on going up and down or falling or through that and all that stuff, it is going to come back to roost. So the chicken will come back to roost. In the end of the day, what will define our survival as a country is the extent to which we capitalize on this massive investment. I should be saying to government, you got a critical mass of $20 billion investment here.
Yes.
Create a program of $100 billion ecosystem around it. And it's all manufacturing capacity, the internal manufacturing capacity.
Fear of energy security.
That's right, because this all comes into the mix so that you can hold yourself against the turbulence coming from collapse of global trading system. That is the top priority. So if you know in the room and doing something right, if you see cement being manufactured right, if you see surround this top production capacity with our MSMEs. Because that Dangote refinery can support 5,000 MSMEs manufacturing one thing or the other, tire, these chemicals, all kinds of things. Manufacturing based on your local material, that is your survival. And then you can export. If you don't export abroad, why are you exporting abroad? You export to the rest of Africa. Do you understand what I'm saying? It's a survival strategy that is based on your strength, that is built around your own economy, than trade, than simply trade. And that, see, look, WTO tells us that what is going on between America and China, it could come down to by 90%. The trade between the two can come down by 90%.
Wow.
To 10%. Nice. Do you know what that means? Why would you be expecting China to be stockpiling crude when there are issues around their productive capacity and how to find market for the one that they have been producing and trading?
Let's continue this conversation immediately after this break. We have a commercial break. We'll be back. Prof is still here. We'll continue this very interesting conversation. This is Business Nigeria. All right, thank you for staying with us. Professor Kenny Faye is still live in the studio. President Institute of Professional Economists and Policy Management is talking so much around this, of course, Naira for crude thing and what it means for our economy. But Prof, let's move a bit away now because we know that, of course, the price of PMS affects the inflation figures one way or the other when there's that flip-flop, gas, energy prices and all of that. And we're expecting another figure to come in anytime from now. Today is, I think it's few days now we'll get the coming inflation. Correct. Now, let me ask you the question this way. What are your expectations considering this flip-flop that we've seen with regards to price of PMS? How is it going to affect that expected outlook from the NBS?
I don't think it will. That actually, okay, first of all, when you analyze the last figure of inflation.
After the rebasing.
Yes, after the rebasing, the second one actually showed that all sectors, subdivisions, all had an increase. Yes. What happened was that the rate of increase was less than the previous month. The only one that didn't have an increase, that actually had a decrease, was energy, and it was the petrol. 0.9% drop That was the only one. You could tell that that was about what happened in December. You know what happened in December? The Dangote factory decided, look, we're going to have all this price everywhere in the country. And for you to do that, you have to have equalization. And the equalization fund cost them over $10 billion naira. Because the equalization was taken out. And they are still fighting with the oil marketers that are owing them 100 billion or 80 billion, whatever, that are still arguing. So they had to foot it for that price to apply everywhere. That transmission bill. Now, that is already being contended because you've got this flip-flop about that. But what I'm saying, I think, is this 1 month, it may not have much impact because what has happened has only happened within a window of 2 weeks. Even the global turbulence now on tariff, you won't see it in this figure. It will be in the next month's figure. Even the current drop in price to $60 and then going down to even 55.
50 something, yes.
You won't see it in this last month's figure because the statistics have already been taken. True. So it will all be in the next one that you will see the impact of all of this.
But are you expecting it to impact significantly?
Oh, absolutely. It's going to be tsunami. Now, I'm telling you, it's going to be tsunami. Because I was trying to take you down that road. If there's a meltdown of 90% drop in the size of the production between America, the trade between America and China, can you imagine the impact? The two biggest world economy that have, you will see the impact. First of all, China will have to find somewhere else to ship these goods to. There are two things China will do. China will devalue. So that automatically those goods become cheaper and people everywhere will buy. Secondly, if they are going to target a market like Nigeria, they will say, okay, for products that go to Nigeria, I give you subsidy, this company, so that they can import. They can lower their price. Two things are going to be happening. Dumping of goods into the country and then predatory pricing into the country. Now, every dollar that can be found in Nigeria will be picked up by traders to import these goods.
Interesting conversation. There's never enough time to talk to Prof, but I must say thank you so much as always. And thank you for coming through for us today. Professor Kenny is a development economist and is the president, Institute of Professional Economists and Policy Management, Nigeria. Thank you so much. Have a great weekend, Prof.
And you too.
I will hope for a better Nigeria as always.
Thank you.
Well, let's go to see what the markets are looking like. Well, the NSE, that's local markets, is negative today, 0.34%. And we have some markets coveting aviation, VFD Group, Abetos, FTN Cocoa for gainers list today. Now for the other list, we have Deep Capital, Ronek, Royalex, Sovereignings, and Guinea and UPDC. To the global markets, where stocks fell and dollars shrunk further today, while bond sell-off took hold in a brutal end of the week. Tit-for-tat worldwide tariffs that have fed fears of a deep recession and shaken investors' confidence in U.S. assets. The anxiety has sparked a rush into safe havens, sending the Swiss franc soaring to a decade high against the dollar and go to a new peak after a brief but massive relief rally following U.S. President Donald Trump's move to temporarily lower tariffs on many countries. In Asia, Japan's Nikkei tumbled 4.3%. Stocks in South Korea fell nearly 1%. Taiwanese main index reversed earlier losses to trade nearly 2% higher. U.S. stock futures, S&P 500 and Nasdaq also reversed scores to be slightly higher after a sharp drop overnight. European futures pointed to a higher open as nervous investors braced for volatility. China has hit back, hiking its tariff on the U.S. and each Trump increase rising fears that Beijing may jack up duties above the current 84%. Chinese stocks were relatively steady. The blue chip CSR 300 was 0.1%. Hong Kong Hang Seng benchmark rose 0.56%. Well, before we go, let me just take a run through the market figures again for today. Like I said, the market is down 0.34%. And I said Caverton Aviation, VTF Group, RBB, and FTN Cocoa, Regalings are the gainers for today. And we have Deep Capital, Royalex, Sovereignings, Guinea Insurance, and UPDC on the losers chart for today. And finally on the show today, let's see if we could bring you the oil prices, which rose after setting more than $2 per barrel lower in the previous session, but were set to drop for a second straight week on concerns about a prolonged trade war between the United States and China. U.S. West Texas Intermediate crude rose to $60